All right, Matt Davio here on the Friday, July 1st. Happy Canada Day as we come into the long weekend. Get Canada North American holiday on Friday and Independence Day in the U.S. here on Monday, Greg.
Yeah. Soon to be the same country. Once we run out of water and resources, we'll have to invade them to sell all their goods to make up our deficit.
When do we take over the southern piece of North America also?
Yeah.
I
guess that's next.
What do we get from Mexico?
We both live too close to the northern part to worry about that right now, right?
Well, so here we are. We've had 1328 on the SPOOs. The week of the 12th, about the 14th, 15th, we were sitting at 1252, a massive rally, 86 points or 76 points. Let's call it 6%. Massive rally this week. So what do you think about it? You know, you mentioned something before we came on air about the monthly chart. So let's talk a little bit about context. Everything has been selling off hard. You know, it's interesting. June 1st, our high was 1342 or so, and here we are, 1328 today.
Yeah, I mean, I'm looking at the SPY on a 5-minute for the last month, and you could argue that it looks like a nice rounded bottom. But then, as I said to you just before we came on, I spent a couple hours last night looking at monthly charts, and the monthly charts to me say sell.
Yeah, I was looking at
across the board, not just equities, metals too, oil too.
Again, and I think the only buy, I agree with your thesis, by the way. Commodities, metals, grains are all looking weak on a broader chart right now, and I think if you look at the dollar, it's the opposite. It does look bullish to me still, and so I think you've got to really watch that dollar. The dollar obviously sold off this week, and I think that's a big part of the rally. The whole.
I'm still bearish on the dollar too. Although I agree with you that in the short run, being a technical guy, I see on the monthly charts I was looking at last night, I see a symmetrical triangle that's been going on for a few years, and that it broke down out of that in April this year. But you could be going back to retest the breakout level.
Right.
The one thing that has me still bearish on it in terms of a bias is that the last 2 months have had nice top tails on them on the candles.
Yeah, I agree. You've got to. I think you've got to watch that year low on the dollar, and the previous low before that was about 71.55. So you still have two layers really before it's tough to get real bearish here just because we're so near that level. Yet the monthly charts, you're right, are bearish on the long-term charts. So are the weekly. Now the daily, to me, I don't know what you think on the daily charts on the dollar. The daily actually, to me, are bullish as long as we hold that last 73.70 area.
I would agree with that. But so in my longer-term bullish or bearish thesis, I'm looking at 77.20 or 77.12, somewhere like that as the top.
Right. That makes sense. And I kind of think, with that in mind, maybe we'll see a breakout of that 76.50 level that we just banged up against twice as we sit here at 74.70 or so. And then maybe equity will roll over at that point, maybe down to that 11.50 level. I think that will coincide. But who knows? I mean, it's strange. Like you said, seeing this rally this week just kind of blows my mind. What do you think about the rally? Because there hasn't been volume. Holiday week, quarter end, month end, all those things going on. What are your thoughts?
Yeah, it's really, I guess in some respects, seemed kind of technical. Once it hit that above the 128.88 level, which was a big one for me a few days ago, it just started going.
Yeah.
And it's been stopping like right at levels along the way. Yesterday, running around 131.86, back and forth over it all day long on the SPYs.
Yeah. Well, I would, I said coming into the week, you really need, you need to see a close over 1330, which I would have said at 1300, no way 2 days ago. And here we are at 1328. I'm shocked.
2 points away, yeah.
It's almost like they're trying to get the close over here, just for the technical people like you and I.
Yeah, that's an interesting, proposition, because it does seem like, there have been some, algos or, machines trading right against the technicals lately.
Yep. And that's a funky thing. So, we're kicking off the real summer season, as I always say, is really the 4th of July through Labor Day. How do you change your trading when you come into these months as we get slower and slower into August, especially? Do you change the way you function as a trader and the way you operate?
Well, I kind of changed when we started to roll over in May, and the first thing you do is start to get lighter, smaller positions, tighter stops, things like that.
Yeah.
And the last couple of weeks, really all I've been doing is earnings plays, day trades, with options. Yeah, the past four days, the only trades I put on have been short-term options plays on earnings.
So do you do a lot of spreads in these summer markets where you'll, if you have like you said, as we've rallied here over the last few days, I've been selling a lot of verticals where I'll sell, the near-term call and buy the call against it outside of it. So, if it's Baidu or something like that, it's got, maybe I'll sell a 145 strike and buy the 150 against it, just a real light risk. Basically playing that it's not going to go over, the 152 level. Do you do things like that when you put on, do you do some spread trading in slow markets like this?
I do spread trading, but generally when I've got a view that it's going to go in my direction. So I do have a couple of longer term trades on now. For companies that have looked strong, even though they pulled back. I've got IBM 175 October calls on right now.
Okay.
And as that pops up, I'll look to sell the 200s against it to spread it out. But most of the trades I've been doing right now have been either risk reversals or straddles or strangles.
So yeah. No, this is exactly what I'm talking about. So you're talking a long trade. I'm talking more. I'm leaning somewhat short on some of these positions. Kind of some of these momentum stocks that really broke down. The Chinese stocks, particularly. The charts are broken now, and these rallies back to the rallies back to the underbelly that we broke down from are, I think, very sellable now. And if you don't like to sell short naked, I think again, good time to sell calls and buy the calls out against. Just to really lock yourself in on the risk side is a good way to do that. And so you're doing the same with buying some calls, obviously limited risk, and saying I'm betting that it's going to go up, and then as it goes up, you're selling calls against it, capturing that gain. Do you ever do something, Greg, where if you're more aggressive on the long side, say on your IBM position, and you feel the volatility is pretty good, will you sell the puts near the strike that you're at, and then buy puts against it, for that, again, protection, kind of a bullish put spread. Do you ever do anything like that?
Occasionally, but generally we'll play the stock itself.
Gotcha.
Try and get an initial run at it, and then take some of my earnings and put them into call spreads.
Okay.
So that it limits my risk that way. I've already made something on the move if that's happening.
Yeah, so you use the stock to finance the purchase of the options for a longer term hold.
Yes,
which is always a wise way to do it.
Yeah, I'd say that over the last 6 months, the only times that I have just outright sold premium have been on selling strangles or selling straddles around earnings events. Mm-hmm. So they've been very short-term trades.
Yeah, and you're just playing for the event noise to make your move either side of it and move on.
Yeah, exactly.
Yeah,
I'm playing for the volatility to come in after the event.
Yep, perfect. Which is a great strategy again during around earnings mechanisms, especially if volatility gets pricey like that. Premiums inch up. That's a perfect way to do it. So what else? What else you seeing again as we come into the 4th? I'm done trading for the week. You're probably similarly, winding down. Any big macro things over July, August that you're going to be watching?
Well, there were a couple things that I looked at that looked interesting to me last night, and one was a sector bet. on the utilities against the financials. I see that that is close to a breakout from a technical perspective. That the ratio between those.
Okay.
For anyone that's looking at it, the ratio is pretty close to bumping up against 2.25 on the XLU versus the XLF. It's hit there 3 times before. That is right around the 50% retracement of where it had fallen off from going into 2009. It looks to me as if a break above that could be a nice 6-month trade to make 30% on it.
And how would somebody do that with the XLU XLF pair that you're suggesting there?
Yeah, for that trade, I actually put out a recommendation on it last night, so they can look at it on my site. But it's also you would go then and buy the XLU and sell the XLF short,
right?
In the ratio.
Yeah.
So I think simplifying it to make whole numbers, I think it was buy 20 XLU and sell 45 XLF.
Okay. So that's a good idea. And again, you're talking 60 days, so sometime into the Labor Day time.
I think that one could run even longer. That might even run into year end.
Yeah, makes a lot of sense. I mean, it makes a lot of sense as prices
on a slightly shorter term basis. I also saw an interesting play on copper against the emerging markets. I thought last night too.
Oh yeah, so I didn't see it. So clue me in on what you thought on the copper versus emergings.
So again, we've talked before. I don't use the futures. So
right.
For me, copper is the JJC ETF, and emerging markets is the EEM ETF.
Okay.
Same kind of pairs trade. Buy the JJC, sell short the EEM, and that looks like a good 3 months, maybe shorter than that, 6 weeks to 3 month trade.
Good. I like it. Two good ideas for our viewers today, and we'll leave them with that. I'm not going to take any more of your time. So thanks, Greg. Make the trip over to Cedar Point this weekend with all the other knuckleheads. It'll be crazy over there.
Yeah, I think we'll be lying in the backyard watching the fireworks on the golf course.
Yeah, exactly. It's a wise move. So, all right, we'll talk to you the next week or two. We'll keep these discussions going. I like doing it, and I like your ideas. And again, folks need to be, if you just trade directionally, start looking at some of these pair ideas. These are great hedged ideas that really provide a lot of upside with, less risk on the downside. So it's a great way to start opening your horizons, I guess, when people are looking at things and giving yourself, more reward, less risk, which is always the hardest part of the game.
Yeah, there's always opportunities out there, whether the market's flat, up or down, or indecisive.
Absolutely. All right, Greg, have a great 4th, and we'll talk to you on the flip side.
Okay, you too, Matt. Talk to you later.
Thanks.